And that gapping feature that I tell you about that I was afraid of. That's where I learned that lesson from, because the Swiss franc just kept going lower. And then in the next session, I'm holding over. It just gaps further against me. I'm like, what the fuck? Clearly, it's got to be done now. Nope. 4 days later, I'm still in there. No stop. No stop. And account gone. So back to saving money, working on the weekend, delivering pizza, getting some scratch capital raised up again, and I had to go back in and do it all over again. And the only lesson I learned from that at the time was don't hold overnight on futures and currencies because the gaps are too much. That was the only lesson at the time that I learned. But now, knowing that what I know now, there's so many things that I understand about price action that I would never have gone long now. As the trader I am right now, and it's not because I'm hindsight 2020 and everybody could be saying the same thing. I know things that I was falling victim to and I was not paying attention to it because I was unaware. I was unaware. My understanding of commitment traders was not what it is today, just simply because the commitment traders were showing long positions by the commercials. That was weeks before, weeks before they had switched to being bearish, net short position. That means if you're looking at commercial traders on a net trader position chart, they had more contracts net short than they were net long. So that means that they were shorting where I was buying. And I was that retail Rick that got his ass handed to him. And I learned years later to look back at that and say, oh, shit. This is one of those millionaire mega trades. And I didn't even see it or recognize it. So understand, this is the guy that you're learning from. Okay. This is the guy that has more understanding today that in the beginning, at that time, I didn't know what the hell I was doing. I was learning all this stuff right then and there. I was learning it. You're having that same right now, that experience right now, but I'm giving you insight that isn't taught anywhere else until they learned it from me. But you can't get it watered down. You have to understand there's a lot more detail to all the things I'm teaching. And just because you're introduced to the idea, don't fall victim to thinking you're ready and go out there and risk money because you're going to hurt yourself. And that small little hurt, that small little loss incurred, and all losses suck. They do. They absolutely suck. But in the beginning, every loss isn't a paper cut. It's like having your arm cut off. You're losing an appendage. You make it like that. You increase it to that level of influence, impact, when it's nowhere near to the degree that you really think it is when you have experience. Look back and oh shit, that was nothing. You're gonna have a whole lot of paper cuts. Sometimes a little bit of gash here, gash there, put a stitch in it, staple it, shut the fuck up and keep going. Do the same thing you've been doing because you just did one small mistake. It doesn't change the model. It doesn't make the model inefficient. It doesn't make it ineffective. It just means that you messed up as the operator. Own it, move on. Don't dwell on it, move on. But if you have flawed logic right from Jump Street, you're going to lose your ass. And you're going to be miserable at the end of it because you're going to remember all the times that you subconsciously knew that you should not have been doing what you're doing, but you didn't listen. You couldn't bring the amount of strength and discipline that's required to simply say, I'm getting out of this. This is wrong. I'll worry about making the money back at a later time. But right now, I got to stop the bleeding because that's the first rule you got to do. Learn how to stop yourself from losing your ass. You're going to lose money, folks. That's a guarantee. You're going to lose money. Every trader loses. They do. I have learned where I lose the most, and I try not to trade in those instances. In April, I took road trips. I said, fuck this. I'm not doing this. I'm not going to get out here and call something that I know the probabilities are so low for me to be accurate. Why? Why feed the trolls? I'm not going to do that. I'm going to practice what I preach. If I don't see some reason for me to be in front of the charts, I'm getting the fuck out of Dodge. See ya. I'm out of here. I had a lot of fun, relaxing, spent my time with my family. It was great. And then I got back home when I felt things were changing. You were told in advance where we were expecting the NASDAQ. You were told where we were expecting the euro, the dollar. They behaved exactly as I outlined them. You can't change that. You can't discount it. You can't say it wasn't real. It's not hindsight and it's not cherry picked. It's 100% understanding. And to answer some of the folks that were crowing to me, can you teach swing trading? Can you talk about higher time frames? I don't want to look at a 1 minute chart. It's just, I'm never going to trade a 1 minute chart. Okay, that's you. But that same idea of understanding what price does and how it delivers, what makes price book the way it does, you can study hundreds of examples over a course of a few months in 1 minute data. And that same logic being applied to a daily or weekly or monthly chart, it's still the same thing. It doesn't feel like that could be true, but it's exactly what it is. Because price, here's here's the major discovery that I had that was a major epiphany. I thought that the market was independently doing things, you know, randomly all the time. When it's not. It's not doing that at all. It's working from higher time frame charts down to lower time frame charts. It's trading to where liquidity is resting, obvious below old low, below old equal lows, or above old high, or above relative equal highs. That's liquidity. Okay. If you have already ran that liquidity, and you, for instance, let's make the argument that you're bearish. Okay. You're bearish on a market and you want to get short and you go into price data. Look at a weekly chart. It supports the idea that you think it's going to go lower. Daily chart looks like it wants to go lower. You can clearly see where it would likely draw down to some old low or relative equal low. You want to look and see, has it gone into buy side recently on a daily chart, a weekly chart, or 4 hour chart? If it has and it's sharply moved away and started going lower, you are in right now a sell model. That means it's already started its movement. So someone that we're going to deem as smart money, someone short, their interest in this is for it to go to an opposing pool of liquidity, which is what? Sell side. So your first objective is to look for low hanging fruit. You want to go to you want to go to a 60-minute chart, find some relative equal low or single low that has not been traded to recently. There are sell stops resting below that. That's this market 101. You don't need to read books to know that. It's simple logic. If it moved up from there, chances are someone's holding a long position and their stop loss is right below that low. So the market's going to gravitate to that. If there's a large fair value gap, some kind of a buy side imbalance, sell side inefficiency that's below that, then you can view that as I'm taking a partial at that short-term 60-minute low, and I'm going to try to get into the high of that buy side imbalance, sell side inefficiency, the highest point, which would be like an institutional order flow entry drill. If you were long or bullish, we're not doing that here. The example would be making the argument that we're looking for lower prices. You would look at the highest point of that buy side imbalance, sell side inefficiency, and then the equilibrium price point. That's how I would treat it. And then I would wait to see, does it want to move lower? I would use the consequent encroachment of that BISI to trade short if it was supporting the idea it wants to move lower. I would not be trying to trade the full closure of that buy side imbalance, sell side inefficiency. That separates me from the people that think they understand that, oh, it's going to go there because gaps have to be filled. They don't have to do anything. Those gaps can stay there for a long time. And they can stay there longer than your fucking equity can stay in your account trying to trade to get that gap filled. So there's rules to this. Okay. There's levels that are understanding, and engagement has to be defined, and you have to be disciplined. Like, you have to know what you're looking for. And it has to be in writing. Like, before I do a trade, I have an expectation of where I want to see it go to. It's written down. Same thing I'm having right now. I have a small little notepad, and these are levels I'm looking for. It won't mean anything to you. I know some of you are like, can you show me it? When you do that, it's literally just me writing down a price. That's it. In my mind, I know why I wrote it. If someone picked it up on the street and said, oh, this is ICT's secret instructions. It's not. It's just, these are areas I believe that the market's going to draw to. In my head, I have the narrative in mind as to why it would do that. I'm not I don't have time, dude. I'm trading on a 1 minute chart, sometimes less than that. Yeah, how long does it take you to write down? I believe that 4111 and a half is sell side liquidity. And fuck that. If the market's already gone, it's left. It's already left the station. Elvis has left the fucking building. It's gone. You can't do that kind of stuff if you're trade trading. You can't journal as you go. You journal after the fact. But when you're studying and tape reading, you just mark down what you think is likely to draw to. And you do that on your chart. Like you do that on your charts. That way it's there. And then you study what you have seen. Did it really do that? How did it behave when it did it? How long did it take to do it? Did it go there and just fall short of it in reverse? All these things are worthwhile studies. But some of the best seasonal tendencies are the ones that fail. I mentioned that in core content when I talked about seasonal tendencies. And that was an observation I really found on my own. I'm not trying to take credit for it or try to make a big deal about it or be dogmatic about it, but when I expected certain seasonal tendencies to behave a certain way in certain markets, when they failed on me, they did it in stunning fashion. Like it was really something to be doing the opposite of. And that was a major help to me when I would lose money trying to go long with what I believed were seasonal tendencies. When I got my ass handed to me, I grew to trust the fact that I can be a short seller because of that pain. When I was taking a loss in a series of losing trades, trying to force my will on a seasonal tendency that I thought, like, don't look at these seasonal tendencies as a panacea. They're not be all end alls. They're not going to be cast in, stone where it always works. They don't always work. And while I wanted to see the indices present that opportunity, when I was going through social media, everybody was expecting it to go lower. Even the news was talking about, oh, stock market's going to go down, the stock market's going to do this and stuff. No, I'm aware that the debt ceiling was an issue. I was aware of all that stuff. We talked about it. But the technicals, the price action was showing us that it wasn't willing to do so. It had unfinished business on the upside. So because of that, we've been maintaining our focus on going long. And for the folks that don't pay attention, you see them. They're the same individuals that tweet like, but what about the seasonal tendency though? I thought we were supposed to go lower though. Okay. There's a there's a measure of common sense that you're going to have to use when you're learning this, especially with me, because I don't have patience for stupidity. If you are not paying attention to the fact that I'm looking at these markets and calling higher prices, I'm pointing your attention to this particular level. I'm looking right there. If it does this, it comes down and treats this fair value gap as an inversion fair value gap. And I think it's going to go up to this buy side liquidity. It's going to go up to this premium volume imbalance. Does that sound bearish to you? If it does, you missed the plot. Go back and start from square one, because I wasn't trying to get you in shorts. I was taking your attention, pointing to those weekly imbalances. Why? Because that's the macro perspective. That macro perspective sets the tone for the market is willing to do the opposite of what I wanted to see. Well, I wanted to see the seasonal tendency. I wanted it to materialize, but because it was stagnant, it was just chopping around. In April, while I was down there sitting on the beach, I'm thinking to myself, you know what? It would be just like them to not send it lower. So where would I want to look for if price wants to go up? I need to take a look at that weekly chart again. And then that's what I shared with y'all. None of my tweets get deleted. They never get deleted. I don't edit them when I mess up and fuck up something or I misspell something. It is the way it is. Okay. Go back and listen to the Twitter spaces. Okay. People take them and they put them on their YouTube videos or channel and they monetize them. I don't give a shit. Make money on it. I don't care. Don't take my videos. And folks, Travis 4X, I'm letting you know your channel is about to get the fuck pulled down on YouTube. I did not give you permission to translate my shit into Spanish. You cannot take my fucking videos and translate them. Okay. I don't give permission to none of that shit. So your whole fucking channel is coming down. It's done. So when I took you through those mindsets of looking for seasonal tendencies, I was not forcing my will, which is what I would have done as a 20-year-old. As a 20-year-old, I would have been like, yeah, this season is going to work. I'm gonna do it. And I would have went into what the media and the news have been saying. Oh, the debt ceiling's not going to be raised, or we're going to default. Personally, I'm going to be honest with you. I wish we would fucking default because that's what it needs. This whole system, okay, just needs a fucking enema. It needs an enema. It's the stock market should not be where it's at right now. Okay, it absolutely should not be here. It is. It's not sustainable. But you can't look at that from common sense perspective and apply it to charts. You got to look at who can we hurt the most. And since the public wanted to sell short, one of the ladies that follow me, she's one of my students. She's like, "Is it time for the seasonal tendency to come in with lower prices now?" I said, "No, I think we need some more altitude first." And we climbed. And then when I told you that it created an immediate rebalance on the daily chart, that really is like a supercharging to it's going to really ram up their ass. And look what they did where we opened up on Sunday. Huge, big exhaustive gap. NASDAQ went way up into that real liquidity void, that gap within that weekly chart's volume imbalance, that little sweet spot. And the whole time Dow has been sleeping. It's just, I got I got better things to do. I'm catnapping. I'm not interested in that. S&P has moved up, but you were told that NASDAQ was the strong one. Well, ICT, if that was the case, why was you trading NASDAQ? Because I'm taking you into one market, and that way you're going to specialize in one, whether you like it or not. You're going to eventually gravitate to one or two markets. You're probably telling me right now, bullshit, watch this. I'm going to trade 28 pairs. I'm going to be the ghost in the forex. You're going to get your ass ghosted. You got to narrow your focus, folks. It's not a disadvantage to do that. It's advantageous for you to do it. Your attention cannot be diluted, especially if you're going to trade the way I'm teaching, because your attention needs to be 100% adhered to one instrument or a very closely correlated instrument. Because if you look at multiple things, and a lot of you are like, hey, can you talk about gold? Can you talk about crude oil? Can you talk about Bitcoin? Can you talk about this? And that? I mean, I don't have the attention span to be able to do all those things. I can't. Like my mind is racing 1,000 miles an hour, and there's so many thoughts that's trying to get in front, and so many things I want to say to you, so many things I want to teach to you, and things I want to do. And I'm wrestling with that. So if I have more markets to talk about, I won't be effective as a teacher. That's how it was when I was doing mentorship. Everybody wanted to add more to. Can you talk about this pair? Can you just fucking listen to what I'm talking about in this one? Because what I'm teaching you in this one works in all of them. It works in all of them. So just slow your roll your sleeves up, and say, okay, he's giving me what works. I'm not getting the flavor that I want, but it still will fill my belly. And I'll learn how to do this on my own market of choice after I learn how to do it, what he's teaching. That's the proper mindset with me. It's not have your way mentorship here. Okay, we're not doing to let's take requests. That's not how this works. Okay, to be effective, I have to do what it is that I know and not be distracted by it, because I'm easily distracted. I'm very easily distracted, and maybe some of you have experienced that. Trying to learn this, it's easy for you to want to be doing something else. You know, and that's why I facetiously say sometimes, put down the game controller, put down the bonbons, put down the potato chips. I need you to really pay attention to what I'm about to say, because if you don't listen and adhere to yourself as a trader or a developing student, you're going to be hurt by it later on, and it's avoidable. So in that time period of being away and taking the road trips and such, I thought to myself, you know what? If I really wanted to fuck people over, I would go after this idea of sell in May and go away. And I would really flood the market with uncertainty. The debt ceiling's not getting raised. We're going to default. Oh man, the stock market's going to get decimated. Every doom and gloom prepper trader fucking channel out there was telling everybody the stocks were going to crash. Nope, they didn't crash, did they? They rammed right up into a level I told you they were going to go to.